here with us, and that's going to be Mike Baudendistel, who is going to be head of our rail and intermodal solutions here at FreightWaves. Mike, it's awesome to have you on. Today we're talking, of course, baby formula and guns on trains, but it's also a little bit of earnings coming out, and I know whenever there are earnings afoot, I'm waiting with bated breath to hear what your take is. Mike, thanks for joining us this morning.
Yeah, there sure were a lot of earnings last week and a lot of volatility to go with it, with the sell-off. And Target was down about 30% last week, and Walmart down about 20%. Those are supposed to be defensive stocks, and hasn't worked out that way. Also, some of the other retailers that tend to be pretty defensive, like Dollar General, that was down a lot too, and Costco. Some of those are still going to report this next week, but basically, what I did for the stock out in the past, newsletter was say, okay, everyone saw the results with Walmart and Target. What does that mean for the CPG companies that sell into those big retailers? And basically what the retailers said was they had cost pressure that really ramped up, that they weren't able to pass on right at that moment to to consumers. And then there was also this big shift in spending from general merchandise to grocery. And for what this means for CPG companies, I count two positives and three negatives from the retailers' results. On the positive side, the results demonstrate that consumers are still spending just as much money at these big box retailers as they were a year ago. If you were just to look at sales and same store sales, you would think nothing was wrong with the big box retailers. Same store sales were still up, kind of mid single digits for Target and Walmart, which is better than a lot of the other retailers. So consumers are still spending a lot of money, even though they don't have the stimulus that you had a year ago. You might have expected them to spend less, with higher fuel prices. And then the other positive is it was clear from the results that CPG is not the first thing that consumers cut back on, which is a confirmation of that trend. Target really cited the big decline was in hard lines, which are things like furniture, appliances, electronics, these big ticket items. It's just easier to cut back on those things, not upgrade your TV, than it is to tell your kids you can't have Lucky Charms anymore. So that's really where consumers have been cutting back. And that those general merchandise categories, inventories are way up at Walmart, up 33%, at Target up 44% versus a year ago. So you are going to see, some discounting in those areas. So CPG does seem a little bit more insulated than most other categories to consumers changing their behavior amid rising inflation. But they did see some pretty significant negatives in those earnings reports from Walmart and Target. First, Walmart does not see any evidence of inflation subsiding in food. There's going to be less inflation in general merchandise because those inventories are so high, but it's going to be for things like patio furniture, toys, things you don't really need to buy, things that you can't eat. You can't eat patio furniture, so it's less helpful than if we actually saw decline in inflation in food, because food, you still have all these pressures on ingredients, grain, from the Ukraine situation, from fertilizer, from fuel, from packaging materials, all these things that go into the price of food. That inflation is still present, and there's still other shoes to drop, unfortunately. And that hurts CPG companies because they've had a hard time fully passing on their cost increases because they don't want to raise prices too much too quickly. Second, I have seen, Walmart did say that they saw trading down in food to private label. I think that's going to be a trend we're going to see in the next few quarters. During the pandemic, there was a shift away from private label towards these national brands as people felt more comfortable spending money. I think that retrenches a little bit. So you'll see, companies like, Treehouse do a little bit better. They make the private label food for a lot of different companies. And then the third, negative, I think Walmart could end up taking share in groceries from traditional grocers. Walmart is committed to being a price leader in grocery, even if it causes some near-term, cost pressures and near-term margin pressure. And they're willing to do that because that's sort of their MO. And I think it ends up, with them having more market share, on the other end of this inflationary period where, you have consumers go to Walmart, realize, well, their groceries are better than they thought they were. And I think that could pressure CPG companies' margins too, because I don't think anyone negotiates harder with their suppliers than Walmart does. So CPG companies, I think, are in a little bit of a tough spot again. I mean, last year you saw them have a lot of margin pressure, and this year they were hoping initially to get some of that back. But I think it's going to be another year where their margins are below targeted levels.
Looking at and switching gears a little bit, because I feel like you nailed all the points here regarding the CPG's pressures, to the top story here where the five senators wrote a letter about railroad companies asking for data on security. From your experience looking at intermodal and rail, do you think that rail companies are going to take up the challenge and give this information? Or what are your thoughts regarding, trying to find out the guns on trains component of our topic?
Yeah, so I don't know how widespread of an issue it is, but it has happened where railroads have had guns stolen from trains. There was a big news story in, I think it was 2017, where well over 100 guns were stolen in the previous couple years from by gang members in Chicago at the Norfolk Southern rail yard, which happens to be located in the Inglewood neighborhood, which is the one that's most known for gun violence in Chicago, and that was a big news story. So they're trying to prevent things like that. There's also been a lot of theft. You probably saw Joanna Marsh wrote up articles about the packages stolen on the trains in Los Angeles. So there's been more lawlessness, I think, lately. So it's something I think the railroads are going to cooperate with, and but I don't know how widespread of a problem it actually is. Maybe we'll find out.
And speaking on that, is this in your mind maybe an overreaction, underreaction, or maybe just treating it just right?
I think the timing seems suspicious. It seems like it's just kind of a political football with, after a terrible shooting, there's Congress wants to do something, show that they have done something, and instead of just sitting on the sidelines. And it's just kind of one thing they can do, but it's still worth looking into, just given that seems like there's rising crime everywhere throughout the country the past year or two. So why not look into it?
Perfect. And thinking about, final question here, do you think that this is something that it's worth looking into? Are the rails usually pretty good at security, or the carriers, from your experience, or do you think there's maybe anything that could be immediately fixed as a result of this information?
I'm not really an expert in the rail security situation. I would say that there's been probably more incidents lately of just, you're seeing things on, media that suggests that there's been more, robberies and things, just like, with all those Amazon packages that you saw littered throughout Los Angeles. I don't remember seeing things like that in previous years, but, in certain locations, they can probably do a better job.
So, Mike, it's always great having you on. Looking forward to everything that you put out, especially the next episode of The Stockout. We'll check in with you shortly.
Okay, good seeing you guys.